Hi, and welcome to RaboTV, a series showcasing Australia's leading innovators in the food and agri space.
Today I'll be providing you an update on the markets, and Charlie will share some sweet news on the sugar sector, direct from the heart of Australian cane production, the Burdekin.
This week we talked to Drew Martin of SureNut, representing his father Tom and the University of South Australia. Together they are credited with developing one of the world's first high-speed nut analysers, classifying almond quality based on size, colour and imperfections. They have now released additional technology aimed at further increasing quality assurance by detecting aflatoxin B1 in almonds and potentially other nuts and seeds globally. Welcome, Drew.
Yeah, thanks, Claudine. Thanks for having me on the show.
This technology measures aflatoxin B1 in almonds and potentially other nuts, seeds and grains. Can you explain why this is important?
Well, aflatoxin is not that commonly known to the average consumer, but it's a carcinogenic substance, toxin, that's known to be on any nut or seed. You know, this system will continue to do the good work of keeping everyone safe. It's just going to do it faster and much more cost effectively and probably more accurately as well.
What impact will this technology have on consumers globally?
Third world countries, there definitely could be some serious changes there if this technology was deployed, where people are still dying from contaminated maize milk and the like. But in the Western countries, the consumer won't really be none the wiser. But the producers and the growers are going to end up with a whole set of useful data and much more efficient way of doing this compliance auditing.
And for global nut producers, how will this nut analyser increase efficiencies?
Yeah, so currently, the concept started out as an analyser to replace the onerous task of staff getting a 500 gram sample for every single bin and physically sorting out every single nut into its category of colour, size, chip scratch, any other defect, which is a very slow, onerous task. And that's what the analyser was initially built to do. And then we discovered under certain lights using the hyperspectral cameras that we could detect aflatoxin B1. We could also measure moisture, and we could also do rancidity. It's like a measure of shelf life. So all of a sudden we had a whole bunch of other tools to add to the traditional analysis that could be done instantly in a few minutes. So staff could be doing something else now while the analysis is done automatically. So yeah, what that's going to mean for producers is basically, more data, more useful data, and obviously some cost savings with meeting their compliance, obligations. Clearly shows though that the computer, the robot, can do it much more accurately, much more consistently than a human can.
It's been a 10-year journey developing this system. How do you train your analyser to recognise a good almond?
My father did most of the training with the University of South Australia. So we've got a fantastic group of researchers down there. They're really quite amazing, actually, under the lead of Professor Sang. My father, Tom Martin, took, I think, 1.5 million images of different variety of almonds and all the different defects and parameters. And then, the clever doctors and professors down there in our research team use deep learning program software and artificial intelligence software to add those libraries into then basically mimic what a human would do.
What does this mean for the industry?
We're very close to having this sort of device in some shape or form deployed throughout all the hulling and processing sheds in Australia and California, where the main industry is. It won't be long, and everyone, the whole industry around the world, will be able to reap the benefits of it. And then from there, I guess we'll be looking at, we've already done some work in pistachios. We've been able to basically get similar results in pistachios and aflatoxin B1 there. And figs, peanuts, walnuts are the next ones in line to look at.
Thanks so much, Drew. We look forward to seeing this technology in the marketplace.
Yeah, thanks very much, Claudine, for having me on the program.
It's a big industry now, Claudine, $1.1 billion, and this looks like a really important innovation.
And provide insights for growers and consumers locally. What's happening in the markets this week?
Last week may have marked an important turning point as US inflation figures rocked the markets. Consumer inflation numbers were released late on Wednesday night, with analysts forecasting year-on-year price growth of 3.6%. The actual figure came in at a stonking 4.2%, which saw stocks and bonds sold off for fear of potential rate hikes. US Federal Reserve Chairman Jerome Powell has tried to calm market fears of an inflation breakout, noting that part of the reason why the number was so high is because at this time last year, the number was very low. That is, there is a significant base effect in the yearly figures. While that's true, the month-on-month increase was also much higher than analyst expectations, clearly high enough to concern bond and equity traders. Later in the week, we also saw producer price inflation numbers, which measures the prices paid by firms for the inputs that they buy. This also came in much higher than expected, with prices rising by 0.6% since March and 6.2% since this time last year. That was almost double the level that surveyed economists were forecasting. I did a quick check of some key inputs last week, and there is little wonder that we are now seeing a pickup in the producer inflation figures. Running through a few key examples of recent price action, iron ore, lumber, copper and steel and shipping costs are all at record highs. Gold, beef, grains, crude oil prices, all at historically high levels. We're also seeing upward pressure on wages as border closures restrict the supply of low-cost labour, and generous unemployment benefits in the United States make it comparatively less attractive to work a low-wage job. Of course, the concern here is that prices keep on rising. If that happens, the US Federal Reserve and the RBA may be forced to change their prediction that the spike in inflation won't last. That would mean higher interest rates, which would be bad news for unemployment and for asset prices. Just on interest rates, one of the Aussie major banks made a prediction late last week that Australia would lose its AAA credit rating following Treasurer Josh Frydenberg's big spending budget. The budget recorded the highest deficit as a percentage of GDP since the end of the Second World War and has forecast another decade at least of deficits. Net debt is expected to peak at $980 billion, but this rests on the somewhat optimistic assumption that the federal government's average borrowing cost will be just 1.6%. 10-year US Treasury bond rates are already higher than that, and if we do see sustained inflation, those rates will continue to go higher. Australian government bonds trade at a higher interest rate than US bonds, and that will especially be the case if we do get a credit rating downgrade. And that's finance.
Thanks, Ben. Now we cross over to Charlie in the Burdekin.
Thanks, Claudine, and welcome to cane country. Here we're coming to you today directly from the paddock in the Burdekin region. So, like many commodities, COVID-19 had quite a significant impact on world sugar consumption just last season. When we look at global sugar consumption, it fell 0.5% after decades of consistent growth. In Australia, we saw this same trend with food service and out-of-home consumption having an impact on those sugary snacks that we tend to enjoy, and of course impacting sugar consumption as a whole. This, coupled with a drop in fuel demand, and in other parts of the world, particularly Brazil and India, we see lower ethanol demand, ethanol that comes from sugarcane being moved across to sugar production, and therefore also putting pressure on the price. But now we're getting out of the pandemic, we see some much sweeter signs in terms of the outlook. This year, we're expecting a 1.3% growth in world sugar consumption, a real recovery from last season. And going out to next year, we see similar consumption growth as well, as consumers return to more normal behaviours. This isn't evenly spread. In Australia, our sugar consumption still grows much more slowly, but for our major export markets, such as Asia, we see really strong growth, much more than we do in other parts of the world. And this means for our growers and those who are exporting sugar, there's a much more favourable outlook and a much more positive vibe now to the industry. Earlier today, I caught up with Ben Nielsen, a cane grower here in the Burdekin, to catch up on what the season looks like and his thoughts on the industry. Hey Ben, great to be on your farm today. Thanks for having us.
No worries, Charlie.
And so how's the crop looking this year?
Yeah, pretty good. I think it'll be a solid crop. Some of the later returns are a bit on the poor side, but the late rain we've had has definitely given them a bit of a pickup. So yeah, I think it's not going to be a world beater, but it's better than average, that's for sure.
A positive outlook, but can it be defined as a sugar rush? Well, we'll find out shortly. Back to you in the studio, Claudine.
Thanks, Charlie. The industry's grit and persistence has really paid off with this turnaround.
Thanks for watching this week's episode of RaboTV.
Join us next week as we catch up with the recently awarded Australian 2021 Queensland Country Life Beef Achiever, Tracy Hayes, sharing her insights into where the new food bowl for Australia may sit.
We look forward to seeing you then.